Hey, what's up, everybody? Welcome to the Average Joe Dividends YouTube channel. This is my Monday buy video. This is portfolio update number 165. What I did was I deposited $100 in my taxable M1 stock brokerage account, my Average Joe Dividends portfolio, and we can see just the performance over the last year of this portfolio. We're up still over 10%, even though it kind of feels like we're on a slide again. We had all-time highs here at $283,000 and 283,826 was the high point of the portfolio, but it wasn't long ago we were in the 260s, and just looking back, 250s, 240s, and all the way back in the 220s. So really, this still the performance of this portfolio has been incredible, even with this tariff news. That's really what's kind of pushing the markets back down. But really, I don't have a problem with it because to me, we have some buying opportunities with the stock market here. But we'll look at the last month, and no surprise, we're down 2% over the last week, down 1.31%. Looks like today we're down just a little bit at 0.73%. So let's go ahead. We'll go into the activity log, and I'm going to show you a few things. And one of someone left a comment about how Southern Company, I think it was, or is a different company where I didn't show the effect of a dividend drip. So we'll kind of do catch up from the last buys, and the last buys that we had were on the 4th and the 6th, and that was the last deposit there. But I don't think we showed the effect of the dividend drip of Southern Company. We'll get into that, and I'll show you that as well, and we can show the 5 buys in here. This is from the last buys where I selected 5 stocks, and I put $20 in each of those. I usually don't do those every Thursday. On Monday, with the $100 deposit, what I do is I let M1 do the picking for me. What I mean by that is we'll go back to the portfolio tab, and I have 3 different slices, and you can see the actual percentage and then my target percentage. So anything that's underweighted is where the money is going to go to. So chances are it went to the ETFs or the 12 more dividend side. So again, on Thursday I actually do picking. So that's how these two differ. But same $100 deposit. So $200 every week I'm putting into this portfolio at least. So we'll take a look at the buy on the 7th here. And this is a dividend drip with Southern Company, and we'll see how that dividend is going to go up. And this is on Friday, I believe. So $7.45 went into there with that buy. And so that bought 0.08315 of a share of Southern. So we'll see that next dividend go up for Southern Company, as well as these 4 buys here. And we had 2 dividend drips. So we had dividends from Amgen, $16.10 rolled in on the 7th, and actually it's on Saturday morning. And same with Yum Brands, since M1 has a 1-day delay for the dividends, and we'll see the effects on these as well. So 2 of the buys are going to be Amgen and Yum with the dividend drips. So it looks like there were 2 buys with the $100 deposit, and the first one was American Express. So 1061 of the $100 went to American Express, and that bought 0.03979 of a share of American Express. And American Express had a nice dividend increase just announced of 15%. And then next up, Amgen. Again, this is a dividend drip, the $16.10 from Saturday morning, and that bought 0.04888 of a share of Amgen. And then most of the $100 I deposited went into KKR, and it was $89.38, and that bought 0.81284 of a share, so about 80% of a share of KKR. KKR does not pay a high dividend, but they did grow their dividend last year, last May, by 6%. And American Express, and they're a low dividend payer, but good growth on both American Express and KKR, even though KKR has kind of dropped recently. But I think long term, both American Express, KKR have great growth potential behind them. And then last up, this is another dividend drip from Yum Brands, and that bought 0.04813 of a share of Yum. So before I move on, I just want to give special thanks to Amy again for that $5 super tip on my last buy video. So thanks again. That was awesome to see that. And we're going to jump over to my Google Docs spreadsheet. You can see we just keep going down here. We were at 274, I think, just a second ago. So you just kind of have to keep that in mind when you have just a stock portfolio, for that matter, is what goes up will go down, and it's part of being a stock investor. You're going to see these ups and downs, and it's normal. I just look at this again, it's a buying opportunity. As we're buying things on sale, and it's no big deal, even though it is hard to kind of be in it, especially if we have a huge slump. If we go back down to the the 220s, whatever it goes down to, it's not easy doing it. But I've been through a few of these cycles. The first one I kind of remember as a stock investor was the Y2K bubble. And then, of course, 2008, 2009, that was really scary to go through as well. And I think COVID was probably the hardest because I had more net worth, a much higher net worth than I did in the Y2K bubble and 2008, 2009. So while COVID was even a short, like 3 months, it seemed like, of a drop, it was hard to stomach because it dropped so fast. And again, I was losing, six figures of net worth in just, it seemed like every week I was losing $100,000 or something like that. It was hard to live through, but what I did was I doubled down. I was putting in extra cash and buying things on sale. You just have to kind of have that mentality. So let's go on over to the Google Docs spreadsheet. We're going to update this with the new stock, or the new number of shares, the cost basis and average cost basis for those four positions. But I'll walk you through the sheet. I'll leave a link below to this sheet. You're welcome to use it to track your dividend stocks, especially if you have a lot of individual positions like I do. I have 52 different positions in my holdings with M1. And the reason why I have so many different positions is I like owning these different positions, having a good diversified portfolio, and I just like tracking these. But you can see, though, most of the portfolio is in SCHD, so it is, I have a good backing of, a large ETF. I have a closed-end fund in there as well, so I have really good diversification. But also I have a huge foundation of ETFs in just a foundation of my wealth. We'll get into that a little bit later. So back to the sheet, it shows the company ticker symbol, the current share price using the Google Finance function, and then the average. We're going to use a VLOOKUP on the M1 data tab. We're going to dump some data into the M1 data tab to update the average cost, the number of shares, as well as the cost basis for those four positions where I bought more fractional shares. You can see here's the current value. If I were to sell, for instance, Fifth Third, I would get $2,079.24. And then here's my cost basis. Here's my gain or loss, including dividends. Here's the gain or loss in a percentage. Anything above 25% will be in green. And it looks like I don't have any losers in here. Hershey's and Pepsi were in the red pretty recently, but looks like they've recovered. I'm surprised with kind of the slide we've had that Hershey's and Pepsi both are not back in the red, but they've recovered nicely. And I bought shares of Hershey's and Pepsi's when they were in the red. So that's why I like seeing that visual and then just making those updates and buying accordingly instead of using my emotions to buy only the winners. So we can see here's the current quarterly dividend per share. The ones in blue, those are monthly pairs. FCHD is a variable dividend. You can see here's BST, that's also a monthly pair. And then here's the current yield. Anything above 5% will be in green for the yield and the yield on cost. You can see like Exxon. This dividend is going to show up tomorrow morning. I'm going to wake up tomorrow morning and get $12.77 from Exxon. And you can see here is the current yield. Here's the yield on my cost because I've bought Exxon. There's the average share price. I purchased Exxon at $47.56. Look at the current share price. That's why there's such a disconnect there and why my yield on cost is so much higher. And then here's the next dividend. We've gone over that. Let's just check that real quick. And Exxon, we'll make sure I didn't buy any fractional shares of Exxon after the ex-dividend date. I'll show you how you can look up your next dividend before you've received it. So we'll find Exxon here real quick. And I've probably gone over or gone past it. There's so many positions in here. Let's see here. We'll go back and we'll try this again. And we'll find Exxon one of these days. Keep scrolling. And this will give you a good chance to kind of see what's in this portfolio as well. There it is. I thought for some reason it'd be above Merck, and it wasn't. So here it is real quick, and we'll pull up the 1 month view to get that dividend earned. So you can see the dividends earned with the 1 month. Most of the time it is correct, and $12.77. That is what's going to show up in my account. So we're going to put $12.77, and we'll get a dividend count too in a second. I'm going to add in the latest dividend plus $12.77. So it does a total of the dividends received from Exxon. And then we'll just count up the dividends received so far in the month of March, $97.14. And then what I've done is I've hard-coded in KKR, since that dividend's going to go up once we update the sheet. It's going to be moving up from $2.93, hopefully in the $3 range there. We're going to also see the dividends, the next dividend for Yum Brands and Amgen. These are going to go up as well. And American Express. Let's see. Yeah, there's American Express. So it's going to move up. Those values are going to move up, as well as the cash flow of the portfolio, the monthly, quarterly, and annual. These are all going to go up once we update the portfolio. But it's going to go up by not very much, because look at American Express pays a 1.24% current dividend, and look at KKR 0.66. Most of the money went into KKR, so it's not going to really move the needle much. I'm okay with that because KKR has been growing their dividend quite well. We can see just how I've done with the stock. I'm up 76% still, even with the drop back down to 105. It was like, I'll have to look and do some research, but it was much higher than 105. But still, look at my average cost of KKR. It's at 6103. Of course, it's going to go up because I'm buying 0.8 of a share at the current rate. So it's going to change here. So let's go on over to, and we're going to grab the data from the holdings tab, and that's going to update my sheet here, so I don't have to type in the new number of shares, average price, and cost basis for those 4 positions where I bought more fractional shares. It's just going to be an automatic update with a simple copy and paste. That's something I created myself with this sheet that I built. And again, I'll leave a link below. You're welcome to use it. So we'll do a pay special, and it's going to automatically change the shares, cost basis, and average for those 4 positions. And I'll show you what I mean over here. So first up, KKR, the old dividend $2.93, and it's going to be $3.07 in 3 months. It'll be at the end of May. So we'll delete that. And we can see kind of some history of KKR, how the dividend has gone up, from the 2s. We were, first dividend was 5 cents. So it just keeps going up. It's going to be a harder slog with KKR because, again, that 0.66% yield. But we're going to see, look at the yield on cost is over 1%. So quite nice to see that, almost double there from the current yield. So we'll scroll down, we'll look at the result of the drips, and we see that Yum Brands first up moved from 781 to 785, and then look at Amgen from 1610, that was the last dividend paid. It's going to be 1621, and these will be in June. And then Exxon, since we have not received that drip yet, has not been applied, we'll see that go up tomorrow as that gets dripped back into Exxon, so it'll be higher than 1277. And then the last one's going to be American Express, and moving up a whole 3 cents, and it was a small buy anyway with American Express, so almost $6 there. So from $5.94 to $5.97. Let's take a look and see how much we moved the needle in the cash flow average of the monthly, quarterly, and annual. Monthly only moved it by 10 cents from 1,046.28 to 1,046.38, and then quarterly moved it from 3,138.83 to 3,139.15, and then the annual moved from 12,555.33 to 12,556.61. We're going to carry the total dividends over real quick. So 97.14. I'm going to put this in a dividend tracker tab, and we'll go over the dividend tracker tab a little bit more in just a second. But what we need to do first is we're going to take that monthly amount, the new monthly cash flow average of 1,046.38, and we're going to put that on the monthly average dividend tracking tab. We go all the way to the bottom. 1,046.38. So that whole dime, and that was because of the $100 deposit. Again, by buying American Express, KKR, it did not move the needle much, but Yum and Amgen helped out there a little bit. And then on Southern, remember that dividend drip, that was after I buy there. So on Friday, I got that Southern dividend drip, and that moved the needle by 2 cents. So, but that wasn't my own money. It's just, again, it was a dividend drip. So anytime I have an event, and an event that could be a dividend increase announced by, look at like Coca-Cola had a 5% dividend increase, and it changed my monthly income by 19 cents. Same with like Allstate there. So dividend increases, deposits, and drips, those are what move the needle for increasing the monthly income. But on the 20th, we're going to get some bad news, of course, from SCHD, which is going to temporarily change my monthly income. It's going to push it down. I guarantee it. It's going to be a 20 or 21 cent dividend I'm predicting for SCHD. And what I mean by that is right here, we'll just say if it's 21 cents, it's going to move my next dividend to 763, right around there. We'll see if I'm wrong, but it's going to move that cash flow average down temporarily, down into the upper 900s is what I'm predicting. Hopefully I'm wrong. We'll go back. And what I may do is just take the average of 2024 and put that in there and just kind of freeze that dividend all through 2024, so we don't have these gyrations of going up and down with SCHD. I just may do that. That's what I do with my ETFs in my IRAs, 401k. I just take the average of the prior year and use that dividend for my monthly cash flow average. And I may just do that with SCHD because I get tired of explaining why it keeps going up and down. So we'll see if I do that or not. So let's go on over to the dividend tracker tab back there. So I've been doing these videos since January 2021. You can see the portfolio value, $18,700, and dividends paid there by tracking the quarterly dividends there as well. And we're going to go to 2025, where we're at right now. You can see how it's just gone up, and we had all-time highs here. That was in just last month at 280, and then we're back into 270s. Here's the dividends so far paid to me in March. I'm predicting dividends of probably 1,600. I think for March, we'll see if I'm right or wrong on that. But look at March of last year. If we do get 1,600, it's going to be quite a increase, I think, from March of 2024. Look at March of 2023. Here's 1,200, 1,400, and hopefully 1,600. You can see how it's just trending upwards year over year with this dividend portfolio. Here is the average monthly dividend. You can see how this has been going up, and of course we'll probably see it go down. And look at, this is last March, I believe. Yeah, where SCHD had that low Q1 dividend, so it pushed it down. I'm predicting the same. It's going to do the same. It's going to push it down temporarily. But look at what it did on that rebound in June. Probably the same thing is going to happen to this portfolio. June 2025, it's going to boom. It's going to go up probably even higher than $86. It'll probably go lower than this, and it'll go higher on the rebound. That's why I kind of maybe want to level it out by using the 2024 average dividend. Here is the monthly increase. Just in March, I've increased my monthly cash flow by $2.48 for a month-over-month gain of 0.24%. And here's the annual dividends, 556.61, and I've increased the annual dividends by $29.81, adding another $100 there, $300. So we'll go ahead and we'll close this out with the total net worth, which has been dropping because the stock market's been dropping. And when I was talking about my base, here's my base in over at Vanguard in boring ETFs like VTI, VTSAX, and VU. And I also have some international exposure. You can see with VXUS in all three of the accounts, but it's not most of what I have. Most of what I have is in US stocks. And here's my 401k over at T Rowe. It's an S&P 500, 100% in there. And then over at M1, I have a IRA over there. You can see a total of it is at $683. It was well over $700,000 not too long ago, so it's been dropping. Here's the dividend portfolio we went into at length. Here's my 1-year emergency fund at M1, getting 4% interest. Here's my 6-month emergency fund over at Synchrony, getting 4% interest as well. And then here is my 2 months of spending I keep over at Capital One in the savings account. I can just quickly pop things to checking and pay off things like my mortgage or credit card balances. You can see there's $11,100 there currently. I opened up 2 things at US Bank. What I'm trying to do is kind of get some the bonuses for the checking account. There's different bonuses for how many direct deposits I do with their bank Smartly checking account. And I'll show you guys. I'm going to do a separate video on this with the US Bank. I'm doing 2 things there. The checking account, they have 2 different tiers of $250, $350, $450, depending upon the total of the direct deposits. So I've got that set up with my work to be direct depositing over there. I'll keep you guys posted on those bonuses. Here's my home value, and here's the liabilities. I have a US Bank card. I also opened up that because if I spend $2,000 in 90 days, I get a $250 bonus. And so I'm well on my way there, just paying my normal bills there. I'll keep you guys posted on that bonus. And I'll let you guys know if it was worth it to get these bonuses. And then here is my balance of my FNBO card over there. And this one's a 1.5% cashback card. This is a 2%. And then, so these are liabilities. I don't carry balance. I pay off my credit card balances in full. So I do not accrue interest. Where I am accruing interest is on this mortgage here at 6.25%, and I've been paying this aggressively to get rid of that. Total net worth now is below 1.75, just below that, and it was at well over 1.8 not too long ago. But again, it's the stock market. It's temporary. It could be months. It could be a year or two. Who knows? Could keep going down. Likely, I think it's going to keep going down. And I will keep buying. I'm going to stay the course. That's what I'm going to keep doing. And I think these are good to have these down markets and show you guys what I'm doing. Just stay the course. Here's the breakdown of my net worth with stocks, home equity, and cash. I got a high cash position over $100,000 right now. I should probably put that into saving or probably into stocks, but I'm waiting until I pay my taxes. I think my tax bill is going to be between 3 and 5,000. So it's going to take some of that down below the $100,000 mark. And here is the breakdown between pre-tax and after-tax. Most people fall for the middle class trap, which is having all of your net worth in your home or in your 401k. And that's why I have after-tax brokerage accounts, so I'm not stuck in that trap. And I also have a good cash cushion there. Here's a breakdown between US and international. And here's what I was talking about with the average dividend, and I've got the average monthly dividend for like my ETFs out here. So I'm not changing these every quarter like I am with SCHD. So once we close out 2025, we get into 2026, I will then pull up the new average dividend there for each of these ETFs. And I think I did that for SCHD. I did. So I took the 2024 dividend. And what I may do is just take this amount and divide it by 4 to get the average monthly dividend for this sheet over here, instead of changing it constantly and putting, the new one announced. We'll see what I do there. So, and then it shows this sheet. This includes interest as well from savings, so I can get my average monthly dividend, all sources, at $3,498.94, so almost at $3,500. So when I'm 59 and a half, if I could access my IRAs and 401ks, I could draw this and not sell a single share of stock or dip into my savings. I would just be living off of dividends and interest only at $3,500, and I could easily live off of that once my home is paid for. But my net worth, even though it's depressing to see it at 1.75 now, but look at though over just from November 2022 how much it's gone up. And we got these dips are okay. We've just seen a steady climb for the most part, just up, 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 up. So we've kind of retreated back to, let's see here, pretty much right about here, October 2024. But look, I'm still at an amazing net worth. And I'm just a single guy. This is not a couple thing. This is just my personal net worth. I know a lot of shows you'll have couples talk about their net worth, but that's 2 people. So I just kind of want to clarify that. So that's all I had to show you guys for this video. We'll go back into the buys that went into 2 positions, and it was into KKR and American Express. Thanks again, everyone, for sticking to the end of the video. If you got value from the video, please click the like button. Also, subscribe so you do not miss future videos. Everyone, take care.